Good evening, everyone. This is Creedmoor with the Bullish Bears. We're going to start the first part of our video series here with the first thing that any trader starts with: the desire to become a day trader. Now, when you look at it on paper, the actual job of a day trader sounds absolutely bonkers to most. We're going to take a decent size income, place a portion of it in a trade with the expectations on nothing more than past performance and the inkling of a few hand-drawn lines and believed analytics to make a profit and turn our initial $100 into $150. Now, on paper, that is a very, very, very bad idea. But when you get into the swing of becoming a trader, it is possible to do that and much more. Now, those that are very analytical notice that that is 50% on your money, but a 50% on your money kind of trade outperforms the S&P statistic from that 7% figure to a nominal approximate 7 times the average of the S&P. Now, with being a day trader, you do take on a heavy amount of risk. You are trying to get in and out of a position directionally with a high volatile move. Something that is highly volatile, highly speculative, and with no guaranteed result of success sounds like a bad idea. And in truth, if you do not know what you're doing and you do not control the self-emotions that you are going to create, then yes, it is a very bad idea. But in being able to stick with your rules that you have set forth for yourself and slowly building an edge of some sort, be this analytical, probability, something that allows you to perform above the traders that have not completed these tasks. That is ultimately how we profit in the market, and why it is so important to become to control your emotions. One thing to keep in mind is that becoming a serious day trader is not a get-rich-quick scheme. It is not a get-rich-quick idea, and successful traders are not built overnight. While you may have here and there 2, 4, 800% gainers, even 1,000% gainers, depending on the size of what you've allocated to, it is highly probable and statistically proven that most of your professional day traders build their accounts through base hits. The 10, 20, and 40% winners are ultimately the foundation of a steady, long-term trading career. Also, diversification. I'm sure you've heard this thousands and thousands of times, read it even more so in your desire to become a trader, searching through forums, ideas, tweets. Everyone continuously says to hold on for a long-term investment. And if you are unable to control your emotions and adequately exit and enter a trade with a strict set of rules, then yes, your best aspect is to more or less put it in a 401k and put it into something that is less volatile than an intraday trade. So let's get to the first part, the desire to become a trader. What drives this desire? The idea you're going to make more money, the thrill of the trade, the guru promised freedom that trading brings with you. You can have a 30-minute trading morning with 2 simple patterns. It's quite an interesting gimmick that's sold to novice individuals. And that's not meant in a bad aspect, the novice part. But falling into these guru schemes will ultimately end up detrimenting you more so than ever helping you out. The truth is that trading itself is a very time-consuming, even with a solid strategy type practice. You have to know how to do certain analytics. You have to put in your own due diligence of finding the sectors, stocks, and strategies that work best for you, and knowing what type of trader you are. Are you best suited for going into short-term downtrend positions and playing the bear side, or are you better at selling premium? Do you prefer only bull movements, or are you able to do a combination of everything? These are the important questions you must ask yourself on your journey. It is part of the human brain to self-preserve. Everything that we do as a trader is of some form risk. Humans being animals, and with that having a certain instinct to protect ourselves, tends to get in the way of trading. When you're a day trader, you must keep in mind that common consensus tends to be wrong more times than not. A simple example is, let's say earnings is coming out for a particular ticker XYZ. They had great earnings, great revenue, great everything. Everything looks stellar. But for some reason, the ticker still goes down. To a logical individual, that would make absolutely no sense. But the fact is that the market does not follow logic. When you are an intraday trader, you must understand the concept of momentum. You must also understand that news affects people. News does not affect a stock. A stock could care less about news. When you have an influx of individuals that have read a certain news article, they then, on their best judgment, will enter and exit positions on a trade, thus causing the volatility, thus causing the price movement. So, does news move a stock? No. News moves people. People move a stock. You being a well-educated trader and having a firm control on your emotions, thus can capitalize on the individuals who have not completed the due diligence and have no self-control of their emotions. When the red bars start to fail, they begin to panic and you get a large sell-off. Even though the ticker itself still has great earnings, great revenue, so on and so forth. The smallest thing can set a waterfall effect into play. Now, emotions are going to be different for every trader, as we all have different experiences in life. Someone that is in a actively stressful situation will react to trading much more differently than someone that is in a much more calm and well-structured strategy. Both people can profit from the market, but they are going to have different thought processes, different entry and exits, and different ways of going about their trading business. You need to draw upon your previous life experiences to understand, are they going to help me or hurt me during my trading? That is one of the strongest recommendations I can have for anyone that gets into trading. Look back at the most stressful points in your life and ask yourself, The emotions that I felt during that time and the physical discrepancies that I may have had, did they help or hurt the situation? And that will be the same questions and answers you'll have to ask about trading. If I am in a bull position and it goes bear and continues to go bear, is it going to benefit me to sit there and get mad at the computer, get mad at the trade, cry, yell, scream, whatever? I've seen traders of the entire gambit throw their keyboards across the room. Another story on that later on. But to bring in the point is you have to be able to know that if you're in a bull position and it goes bear beyond your stop level, you need to just get out and reverse your position on that trade. Subject of doing that, if you are not able to enter into a reverse trade, then step away from your system. Sometimes that is the best thing you can do. After 3 red trades in a row, a very large red trade, let's say your stop just did not fire in the area you were wanting, and you ended up taking a much larger loss than anticipated, the best thing you can do is make sure you have no active positions and just walk away. Recalibrate your thoughts, write down the experience in your journal, and wait till the next day. If you're trying to trade with heavy emotions, death in the family, loss of a significant other, death of a pet, financial stress, all of these things are going to take an effect on you as a trader and in the beginning portions of your journey. If you allow these things to affect your trading, then you will never become a successful trader. You must be able to control these aspects. If they are beyond your control, you must have the self-respect to know that when I am in this situation, it has never shown profits for me in my trading, so I do not need to trade. There are many, many, many different points of sociology and psychology that go into the methodology of trading. I encourage you to open up a simple journal. You can grab one from your local dollar store, a Walmart. Grab some printer paper, something. But write down the 5 greatest experiences of your life, the 5 worst experiences in your life, thus far on both. Analyze those emotions and see how they helped or hindered the situation. Not every happy moment in life helped a situation, and not every sad moment was a detriment to a situation. Analyzing these areas, you'll see what emotions you are able to control and which ones you are not. You need to build a system to control these emotions so that you do not experience them during your trading. Well, this has been Creedmoor with the Bullish Bears, with a little bit on the trading emotions you would experience in your first time as a trader and what you can expect. We'll go more into this into the next video in a much more specified section of you have just started the learning process, being overwhelmed with new information, and the possibility of placing your first paper trade. Tune in next time. Make sure that you hit the like and subscribe button. Make sure you hit that little bell icon too, so you're alerted anytime we upload new videos. If you have any questions or concerns, please send us an email at bbteam@bullishbears.com. Leave your comments below on how I can improve these videos and can continue to help the trading community at large. As always, remember, your trades are in the history. and I'll see you around.